Welcome back. Joining me now is Muhammed Wagley from Sasfin Wealth for a look into the day's trading session. Muhammed, thanks so much for your time today. As mentioned, some calm returning to markets, mainly on the back of President Trump's comments at Davos, calling for negotiations over Greenland and ruling out any force. Something, to take in and some comfort, coming back to markets there.
Hi, Darling. Of course, always a pleasure to be on the show. And yeah, I think you hit the nail on the head earlier. There has been, at least it seems to me, a de-escalation in the rhetoric. What he said about not wanting to use military force is big. It seems to me that market has taken that as a view that, that's very unlikely to happen. It could just be posturing, but if you look at sort of the rallying that we're seeing now, indicative of risk off sentiment being a bit more pervasive, it looks like the markets have across the board taken that quite well. Personally, I don't feel like too much has changed in terms of the status quo. Yes, he's not going to use military, or at least that's what he's saying, but he is very adamant that the Americans still want Greenland. They want to own it, so this, is by no means over. There's still going to be quite a few moving parts. And, that was just a part of what he was saying over there in Davos. It was really just headline after headline. I think this is what people were focusing on most, just given the implications that it may have for NATO, for European-American relations, those sort of consequences are very far-reaching. The de-escalation is small, but I think it was taken quite well by markets. But, I don't think this is over by any stretch of the imagination. I imagine this will develop well into the year.
Exactly that, Mohammed, because we do know that President Trump is known to say one thing on one day and completely change his mind and say the opposite the next day. And just digging deeper into the president's address, he touched on a lot of issues there, from the Fed to US growth, to even the issue around debt. What stood out the most from you? I know that there was a lot of emphasis and importance around Greenland.
Yeah, so I think Greenland, for obvious reasons, was the one that everybody was looking out for. I mentioned not just from a market perspective, think about things like gold and what it would mean for safe haven assets and risk on sentiment, but also, ideologically, there are very sort of wide-reaching consequences in that respect. But I thought it was quite just, coming back to what you were saying, I thought it was quite interesting that he really was harping on about how the EU doesn't actually pull their weight when it comes to NATO. And, just coming back to what you were saying, I think that's one thing that he's been, extremely consistent about, for the past few years or so. But yeah, the main takeaway was absolutely the Greenland thing. I think we'll be digesting sort of the rest of it. It didn't end too long ago, so we'll be sort of going through the fallout of that. But Greenland was for sure the main takeaway.
All right, let's take a look at what's been playing out here at home. We had some economic data coming through. Inflation edging slightly higher to 3.6% in December. More interesting, though, is that consumer prices averaged at 3.2% on an annual basis, and this is the lowest it's ever been in over 20 years. Encouraging, right? Considering that we are moving closer to that 3% target, and that could possibly mean even more interest rate cuts in the longer term, the medium to longer term.
Yeah, 100%. So I would say sort of the second part of what you just said there in terms of that average CPI was probably the good part of the print. We did, it must be said in absolute terms, come in a little bit softer than the previous month at 3.6%. But, ultimately, I would say even in a vacuum, probably wouldn't be too big a cause for concern.
Yeah.
I think fuel was a bit of a contributor in that sense. And it does look like we're going to be seeing cuts in this month. I don't think we've got them yet, but the likelihood is that is going to counteract some of the inflationary effects that we saw towards the end of December. I think all in all, not too much to change, at least from a Reserve Bank perspective. I do think, it was sort of on the cards that relatively early into the year, we were looking to get a rate cut. I don't think that's really going to change based on this information. I don't think it's really going to speed up or slow down anything. But let's see. I think ultimately, things are still encouraging, as you said.
I mean, that meeting is next week, and we're crossing fingers and toes that we get some relief as South African consumers. Let's take a look at some company news. Karoo keeps posting, record after record numbers, with Cartrack subscription revenue delivering a double-digit growth. The share price, however, moving in the opposite direction. Why the disconnect? Is it anything to be concerned about?
So it's interesting. I would say broadly, I very much agree with you. I thought this was a good set of numbers. Really what you're looking for. When one thinks of Karoo, we're really thinking car track, and you're
Yeah.
really looking at the subscription revenue and the growth in subscribers. We saw handsome growth across both those metrics. Operating profit was up 7%. If you looked at the outlook, there really was a lot to like. Strategically, they're doing all the right things, reinvesting into the business, reinvesting into the high growth parts of the business. But then you look at the share price and it's down about 4%.
Yeah.
I wouldn't necessarily read too much into that. When I had a look, it looked like the volumes were around 500,000 rand, there or thereabout, which isn't necessarily super substantial. I wouldn't say it could have been one or two sort of relatively big clients taking some profits there. But ultimately, I really wouldn't worry about that too much. I thought the numbers in isolation were quite good, sort of as taken aback as you are in terms of why the share price went down that much. But again, very small volume, so I wouldn't worry too much there.
All right, let's get your stock pick. What are you hanging your hat on today?
Yeah, so look, over the past at least month or so, we've been hearing a lot about the memory space, in conjunction with AI. And I think when people think about memory, you think about, well, how much data can be stored. Really, what's more relevant within the context of AI is how fast data can be processed. Now, within that space, they would call it sort of the DRAM, dynamic random access memory, and high bandwidth memory space. There's actually only three companies, really only three companies, in terms of the vast majority of the market. And in that sense, we're seeing sort of huge supply bottlenecks in the space. These guys can't get those stacks out fast enough. And I like, actually, I've got to say, all three of these big players.
Yeah.
Two of them you can only really get in Korea. That's SK Hynix and Samsung. And then one is an American player, Micron. I'm actually going to go for the Korean company that you can get, which is Samsung. So there's a lot more sort of going on than just the memory in that sense, but memory is sort of where all the growth within this company is going to come from. So from that perspective, is almost like a pure play. I really like this company. I'm picking them on the basis that from a price to book perspective, they're a little bit cheaper than those competitors. I think that's really the metric you got to look at within this space, and they've got a lot of room to grow. So Samsung Electronics, if you can find the ADR, get that.
All right, let's leave it there. Muhammad, thank you so much for your time and taking us through trade this evening. That was Muhammed Wagley from Sasfin Wealth.